Hello and welcome to tonight's Where's the Trade. My name is Joshua Bellinger of OptionSizzle.com, and today we're going to look at Deere and Company. So the strike that stands out to you if you look at this option montage would be the February 100 calls here. So if we scroll down to the back of the board and look at some of the other contracts, we see that the activity was really focused in on those February 100 calls. Taking a look at where prices closed at, just at $94, we're looking at another 6-point rally, potentially if these options were bought. And with the time frame that we have here is 18 days. So looking down and going down to the option statistics for those that do not have data to tell them if these options were bought or sold, we can kind of start piecing the puzzles together, the puzzle pieces together by looking at some of these statistics here. So with the 18,000 calls traded, 73% of them traded on or above the offer, which is what we want to see. Now, I can see the data. I'm looking at it right now, and I wrote this to my premium members of my service today. But those contracts, those 100 contracts were purchased. The nice thing about this kind of activity is that it wasn't a big block that traded. These were blocks that came in, blocks of 200, 225. So looking at the order flow here, we had contracts that hit at 15 cents. We had some that hit at 39 cents, 40 cents, 42 cents. So they were buying throughout the day, and that's what you want to see, is that accumulation, and that's nice. If we take a look at the chart here, though, one of the things that has me a little weary is that not only do we have a short amount of time here, but with 18 days, but looking at the chart here, and if we back this out to a 5-year chart, we see that we have this resistance here right at $95. Now, earnings are coming up here, and it is on the 11th of February. So that is something to keep in mind, is that earnings are coming up, and earnings and the expiration will occur on February options. So it would have happened before then. But stocks that typically go to $90 and hold it will usually go to 100. However, being that resistance is right here at 95, I'm a little weary of what could potentially happen. So one of the things that you could look to do is spread this trade here. Look out for these options and potentially play them into earnings and sell the move in implied volatility, or to do some kind of spread here, 95, 100 spread. That could be a play, or look to sell the Februaries and buy the March. The problem with that one is that you're selling the premium here, which could go up in price going into earnings, and that wouldn't really be a ideal trade with earnings coming in the next 2 weeks here. Here's what I would like for you to do now. Make sure you click subscribe if you haven't. If you like the video, give it a thumbs up. If you don't, give it a thumbs down. Leave a comment below. Tell me why you liked it, why you did not like it. And if you found the information to be valuable and you think that there's someone else out there that you know that could use the information or find the information valuable, make sure you click the share icon here and share the video with them.